All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. I got something special planned here for today. So I hope you guys get something good out of this. If you're new to the stream, welcome. I stream every Monday around this time. And the purpose of this stream is to review my article that I published on TradingView the day before. And then what I do is I like to go into the Trade Scanner Pro and see if we could find any trade examples so that I can show you how to best use this tool. All right, so with that being said, let's get started. Hold on, let me just put this thing over here. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. If you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. All right. So first thing I want to do is I want to run through the economic calendar. All right. You should do this every Monday just so you're aware of what events can be coming out during the week that can have an effect on your positions. So first, it's a very quiet week. So what I saw this week was first we have on Thursday, we have GDP, annual GDP growth or whatever, but that's not a major number. It was on the calendar, but I wouldn't make a big deal out of GDP. There, I also noticed there were a couple of like CPI reports coming out of like Germany and Japan or whatever. Those again are not major market moving numbers. They can have an effect on your Forex pair if you're in a Forex pair, but typically I wouldn't worry about those. Now, the only thing that I saw that was worth mentioning this week was on Friday, we have core PCE, which is core personal consumption expenditures. And the Fed looks at that number. So that, I believe, is an 8:30 a.m. number, but double check the timestamp. It may be a 10 a.m. number. That, because that one is funky. You know, it's not like the CPI report and stuff like that. So core PCE, make sure you're aware of that, because that, if there are any surprises in that number, it can move the market in an unexpected way, and you want to be prepared for that. Also, volume typically dries up into such numbers. So all I would say is double check the timestamp. All right, you guys, so if there's anyone here watching me, do me a favor, let me know in the chat, say hello, let me know if you can hear me or not. Maybe you guys can't hear me. I adjusted my microphone a bit to try to make it closer, and my sound should be slightly better. I know there's still probably a reverb in the room here, but like you can't see my mic, but it's closer. Okay, so anyway, some feedback on that would be appreciated. All right, so we got the economic calendar out of the way. Let's get straight into the charts, shall we? I'm going to make this chart bigger over here, make myself smaller. All right, let's do that. So right here we have, I'm going to make this chart bigger. Okay, this is the chart. Hey, Nugs, how are you? Okay, cool. Thanks for letting me know. So this is the daily chart that I share on TradingView. I publish my analysis every Sunday. There hasn't really been a whole lot to say over the previous few weeks because look what's going on. We've been in this tight range. Hey, Slow PC, how are you? From Mexico. All right, mucho gusto. From Mexico. All right, cool. Puedo hablar algunas español. Cool. My Spanish speaking lesson for today. Anyway, so this situation that we've had in Bitcoin that I'm highlighting here has been very tough to trade, especially on this time frame. Now, I've been warning people. About this consolidation. Don't jump to conclusions. Don't have any opinions, because you can get really messed up and very confused in this consolidation. I mean, look, this goes all the way back to what? What is this? February 2nd. So it goes all the way back to the beginning of the month, right? We're basically more than halfway through the month right now. And we've been in this range between 100K basically and 95K. That's been the consolidation range. So as a swing trader, this is not something you really want to get involved in. But on smaller time frames, there is a lot of opportunity in this area. Now, the point of my article was, because you see this arrow that I drew here, right? This blue arrow, this was the result of two pieces of news. And this is why I'm so against following news and why I don't follow news. So we had the peak here. What is the high there? 99,517. My week before article, the article that I wrote 1 week before, warned against that 99K level. I said that's a resistance level. If you pay attention to levels, you would know, I probably shouldn't go long there. Well, Coinbase comes out and says, oh, the SEC is going to drop their, case or whatever, blah, blah, blah. So all the morons jump in here, right? Because they think it's great news. And then right after it, we get Bybit hack. Now, this is my point about news and why it is not helpful. Because if you were all in on that Coinbase news, there was no way to know that Bybit was going to be hacked like the next day. Unless you were an insider on the hacking team, there was no way to know. So news comes out as surprises and the market has to adjust. If you bought at 99K, you are stuck in this thing if you haven't gotten out. And because of this, because all these longs pile in up here as a result of reacting to Coinbase news, now they're all stuck and banging it out. So there's a greater chance, in my opinion, that the 95K support breaks, right? Which looks like it's happening right now pretty much in slow motion. But I suspect we go and test 90K this week because of all the extra longs that are caught in this thing, right? That's when you see a move like this, when it like runs up to like a peak and then gives it back, like rejects it harshly like that, that's bearish momentum and people are caught. So people don't just bang it out. A lot of people stay in it because that's human nature. And then they get margined out once this thing collapses. As you can see, my illustration that I drew on my chart, which are these two lines here, I drew this yesterday. I suspect or was anticipating that we break the 95K support or 94K. That would be like the max range low. And then we test 90K. Now that's just a possibility. That is what I would be betting on. So what does that mean? How do we use that? Well, if you're not short, which, there's a good chance you're not short. I mean, I'm not short this thing right now. I don't swing trade on the short side. I'll day trade on the short side, but I will not swing trade on the short side. So there's nothing to do. But how this information helps us is don't be going long at this support this time. The support holds until it breaks. Now, this 100K rejection is now a lower high, okay? It's a lower high. Usually what follows lower highs are lower lows. Now, this thing, again, it's been in a consolidation, but it's like in a consolidation of a consolidation. So like I said, we have the 95K to 100K. We're breaking that, and 90K can very easily be next, which will take us into the broader range low. Okay, the 90K low is a pretty important low, and it's briefly touched that. Like, as you can see, there's been a lot of buying activity going way back some months. It went as low as 89K over here and swift rejection, right? That's what we want to see for a swing trade long. So we are in the buying zone, but there's no reason to buy right now. There's no rejection. There's no confirmation. There's nothing. So I would wait for at least the lower 90K possibility, unless, of course, maybe we get a nice bullish inside bar tomorrow or something like that. But that's up to the market. I can't forecast that. I have no idea. So I have to suspect, because we have this lower high, that there's a greater chance that the 94, 95K area is going to be cleared, which it's not cleared yet, but I believe there's a greater chance it will be over the next few days, which means I'm not in a hurry to buy. I would not step in front of this. Wait for the 90K, see how price action unfolds there. That would be a great spot for day trades, by the way, possibly for an aggressive swing trade. Now, that's how I would use my broader analysis for swing trades. Other than that, there's nothing to do. These are not good investing prices. Good investing prices would be, either 90K or in the 80s if it can get that low. Because again, we have this broader consolidation. right? This broader consolidation, which is likely a wave 4. And if it can hold, and it can hold long enough, eventually it could break out to a much greater wave 5. That could take us beyond 100K and the all-time high of 109K. That leg can, but who knows when that leg will unfold. You would need some major catalyst behind that, and it will probably be quick. So we don't have the confirmations for something like that. At minimum would be a break of this high, right? We have to break into the 100Ks at minimum before we can even argue something like that. So right now, I would not be counting on that scenario, at least for the short term. Okay, that's my analysis. That's pretty much how I would manage this situation right now. You guys follow me? All right, so let's get into what I really want to talk about today. Let's see, I don't have a whole lot of people watching. What I'm about to show you is something I'm going to make a video on, a more formal video that's more like condensed, 10 minutes, easy to watch, and just a nice higher quality video. But I wanted to show you this on stream anyway, so you can see it in real time and ask questions. So the title of today's video, as you notice, is Bitcoin day traders, or Bitcoin traders, filter false signals with this simple system. What simple system am I talking about? I'm going to get into it. Now, this is where I'm going to get into the Trade Scanner Pro part of the stream, because I want to see if we can find trades, right? If you want to learn more about the Trade Scanner Pro, there's a link in the description. I'm not going to explain how it works here exactly. There's a training link or a whatever. The first link in the description will explain all that for you, a tutorial in there. All right, so what I want to do is, usually on these streams, I'll spend a few minutes talking about how to come up with a trade idea, right? And we start with the hourly chart, and then we go to the 1-minute chart and all that kind of stuff. Well, I'm going to give you a shortcut today. So we're not going to do the hourly chart like I normally do. We're going to jump right to the smaller time frame, right? Now, this is an hourly chart. I will show this briefly on here just for people that are interested in bigger time frame trades, because it's pretty much the same. Right now, on my Trade Scanner Pro, I have on my hourly chart, I'm on Bitcoin Perpetual Futures. It's the MEXC chart. On my Trade Scanner Pro, I have the trailing stop, I have the show previous trades, and the heads up checked. I don't have counter trend checked. That's important to understand, because this is not a counter trend tutorial. Now, here's the thing. When we're using the Trade Scanner Pro, we have to figure out what side of the market we want to work on. And that's what I normally would use the hourly chart to then figure out the 1-minute chart. But here's all you have to do to make it very quick and very simple. If you notice on my chart up here, I have 2 moving averages. Right? I'm going to turn them on. So I have the 100 period and I have the 50 period. Now, for those of you that know me a long time, you know that I am a big proponent of less is more, and I do not like using things like moving averages or oscillators and things like that on my chart. I don't like to pollute the charts. Now, I don't personally like to use these, but I found that they can be helpful for people that are looking to figure out what side of the market to trade. This is particular for beginners, and to help you filter out false signals. Now, a moving average crossover system is a simple and old system that does not make money. So we're not looking at the crossovers. What we're looking simply for here is the position of the moving averages. So I'm using a 100 period. That's my longer moving average. It's the red line here. And I'm using a 50 period moving average. These are exponential moving averages. It really doesn't matter if you use exponential or simple. I just have exponential because it's more sensitive to price. All right, it really doesn't matter though. Now, what I'm interested in is the crossover. So if the green is below the red, then I should be working on the short side. It's that simple. If the green is above the red, I should be working on the long side when it comes to the Trade Scanner Pro. So I'm, again, not looking for the crossovers. I'm just looking for the positions of the moving average. The other thing I'm looking for, right? So that right there decides what side we should be working on. All right. And of course, this thing agrees with it. It says trend is bearish. But it also, I just want to throw this in there. It kind of helps too if you just pay attention to the structure, the general structure. And the general structure also makes sense with this idea. All right. Lower high, right? We got lower high. And this is likely to produce a lower high. We barely have a lower low, so maybe it's beginning to turn, but we don't have any proof of turn just yet, right? Now, one thing I have to mention about moving averages is, remember, they're lagging. They will always be lagging. So they require time to print, right? And the price action has to do something, has to spend, in this case, 50 candles or 50 bars and 100 bars for these things to generate, right? So it's basically giving you an average price of all these candles combined back here. That's what it is. So there's nothing special here. It just gives you a visual cue. That is it. Now, this tells us I should be thinking short. So using this helpful visual method, which, by the way, Steen is going to incorporate this into the tool eventually so that it will help you filter signals without having to do what I'm about to show you. All right, but he's not there with it yet. So you're using this as, okay, we want to go short. It's relevant to your time frame. So if I was going to work on the hourly chart, then I would be thinking short, okay? Now, that's the first step. The second step, just as far as support and resistance levels, that doesn't change. I do want to know, are we at support or at resistance? All right, so you can simply do that on your hourly chart. You just look back. There is a reaction there. There's some reaction over here. Look at that. Interesting, okay? And there's some reactions up in this area right here. That's it. 3 horizontal lines, and it's all based on these large movements, all right? So that answers the question, am I at a support or am I at a resistance? Well, I'm not exactly at a resistance, but I'm not exactly at a support either. So what does that tell me? Let's see who's paying attention. What do you think that means as far as my trade idea goes? Because remember, the whole point of using these moving averages is to help me arrive at a trade idea. I want to know, should I go long or should I go short? What type of signal should I be looking for? So knowing where we are right here, we're sort of in the middle here. What side do you think I should be working on, long or short? Because where you are relative to your levels can have an effect on that decision. Anyone want to answer that? And you can also say, I don't know. That's an acceptable answer. I'm here to provide clarity and teach you. Slow, you say long. Why long? I'm just curious. Why long? Anyone else agree with that? Don't be shy. All right? I'm not gonna humiliate you here. We're here to learn. So you say T. Now you're saying short? Oh no, Nug says short. Slow Peasy says T. I don't know what T means. T at support? Okay, so here's the thing. Nugs, I'm with Nugs, short. And the reason is we're not exactly at support, right? Support is this line right here. We bounced off support, it looks like. We bounced off of a support. Hey, Sabi, how are you? Good to see you. This is our support. So we're in the middle, right? We're not really anywhere here. Resistance is up here. My moving averages tell me I should be leaning on the short side to begin with, right? So I'm not fighting the support exactly. We're not on, if I was right on that support, if we had a test of support again and we were getting like a double bottom, then I may make an exception there. And that may call for counter trend, but we're not in that situation, are we? We're popped up a bit. This is an hourly chart, remember. We popped up a bit, so it's likely to develop into a lower high if this momentum and this trend stays intact. And if we get a lower high, then a lower low is likely to follow, right? So I would work on the short side. That's how I'm using that. So do you guys see how, I can arrive at that conclusion by looking at these moving averages and saying, okay, the crossover is bearish. So that should tell me to lean on the short side. I should be looking for short confirmations. And I'm not sitting on support. I've rejected the support a bit. It'd be nicer if I was up at resistance. That would be nice, but we're not there, okay? And if the market is truly weak, a lot of times it won't get back up to resistance. It'll just form a lower high somewhere along the way because it's weak. That's the whole point of being weak, right? So that's the thought process. Do you guys understand that? And do you guys understand how the moving averages can help you make a quicker visual decision? Because that's what I'm suggesting them for. Okay. And I was doing some experiments with these because, again, personally, I really don't need these. I just do the lower high, lower low evaluation, and I come up with the same conclusion. And it's usually more in line with the market because it's more in line with real time rather than moving averages, which are lagging. Why not do nothing in the middle of the trade? Well, we can do nothing. That is a possibility. But the thing is, I want to work on my 1 minute chart and I want to find trades for our demonstration today. So I have to figure, how do I come up with a trade idea? But yeah, doing nothing is certainly a valid choice. Okay, but if I have to do something, I'm just trying to find what side should I be working on. And when you get to these midpoints like this, again, is this really a midpoint? It's a midpoint relative to this price action right here. But overall, this thing is generally bearish, right? This is a lower high. So I'm open to I want to work on the side of the momentum. But if you're not comfortable and you're like, I just don't like it, flat is a position. Nothing wrong with that. I just have to show an example. So I have to come up with a trade idea. Can you argue that I'm forcing a trade idea? I guess you can argue that, but the only way I'd really say I'm not doing anything is if these candles were small, it was clearly like there's no clear trend. There's no large candles. Like if this clearly is bearish, right? So I'm willing to give it a try. If we were in a situation that looked more like this up here, see like the small candles, range bound, blah, blah, blah. That would be a much stronger argument for me to do nothing. Make sense? We don't have that here. Okay. In fact, since I've been talking, this candle has given back a bunch so far. It's like giving back half of itself so far. Right? So with that being said, let's switch this to a 1 minute chart because that's the time frame I want to work on for day trades. Oh, and by the way, I have some information about, oh, and look, there's a trade that's happening here that I'm missing out on. I want to mention something about the real money situation. All right, but now going back, so everything I just said on the hourly chart, you can use that if you're looking to trade the hourly time frame. Now, I'm on my 1 minute chart. Look at the moving averages. The green is below the red. It's telling me bearish. Okay. Look, the trade scanner has been calling. This was a nice bearish trade. This one stopped out, it looks like. Okay. And this one, there's nothing we can do about this one. This one, stuff like this is going to happen because everything made sense there. It just, you get noise. How much was this stopped out for? 178 points, right? That's going to happen. But then this one was a winner for what? 280 points on a 1 minute chart. And by the way, that's calculated, that winner is calculated from the profit objective, not the trailing stop. This trailing stop is probably worth a lot more because look at that move. Right? So that's the first, that's the initial way to have the moving averages or a simple moving average system help you decide what side to work on. But what about the false signals? Because that's really like the title of the video. What about the false signals? So I want to point something out about these moving averages. If you notice something here, when the market reverses and goes the other way and the move is sustained, you'll notice the moving averages converge, right? They form this converging pattern. This happens all the time. The moving averages are getting closer and closer together. That means price has gone below the average price and is moving lower and lower, right? And the average price is getting closer and closer. When you see this happening, look at this situation here, right? You have a signal. This one happens to work out, but when you see signals, when during this type of converging situation, you want to avoid those signals. Okay. This one, now, it doesn't mean that they're all not going to work out. It just filters out more false signals than not. This one happened to work if you shorted this, right? How much was this worth? Profit, 239 points. All right. But again, they're more random. Let me see if I can find an example where it stops, it gets you out of a false signal. See, now look, here's one where the moving averages are moving apart, basically, right? They're not converging here. Look, they started out small after the crossover. They start to expand, right? And then you get the signal. This is beautiful. This is what you want to see. You want to see the moving averages expand and then the signal. That's what you want to see. Look at this beautiful signal over here. Beautiful, right? Now, this one, the moving averages are coming together. But there's still there's a lot of space between them. So this one you could argue, but you can also argue, well, they're coming closer together. So if you want to avoid this was a winner too, right? Yeah, this is a winner. You could use that as an argument to avoid this, but like I said, the thing to staying away or the false signals are when it's really tight like this. Okay, that's when you get the false signals the most. Is that an update on the trade scanner? No, this is not an update. This is going to be an update where the trade scanner will do this for you automatically and just erase those signals, like a signal that has a converging moving average situation. I just want to see if I could find a nice example here where we get like a converging moving average situation. This isn't converging. Here's one. Well, I got to find a really good example of one where it's converging and then it doesn't work, right? Because that's a false signal. Got to look back here. Man, all these signals are like working. Okay, here's some examples right here. So if you notice here, right, it called 3 longs in a row, right? Long, long, long. Look at the moving average, though. In fact, let's do the replay and let's see what it looked like at the time, right? This is what your chart would have looked like at the time doing the replay. So let's see how the moving averages are. Look, right there. If you notice, it's starting to converge, right? So maybe this first one, you may still argue, okay, I'll take that because there's still plenty of space between the moving averages, right? They're not tight together yet. So as we go forward, okay, that one stops out. Okay, look, the second one opens up right away. Now this is pretty clear. They're converging. So you shouldn't take this signal, okay? And of course, we know after the fact it stops out most likely, right? It stops out. And then the third one, it calls the third one. Now this is super clear. No trade. No trade. These are converging, right? So, you know, that one goes to the profit objective. Interesting. But you still want to avoid it. Okay. Let's see what happens there. Is that eventually? Okay, I went to the trailing stop. So that was still why it was a losing trade. That thing went to the profit objective, though. It just never closed up there. But do you see how that works? The whole point is when you get these converging moving averages, you want to avoid the trade signals that occur there. Does that make sense? They're not always bad trades, but most of the time, I'd say more often than not, they're false signals. And we want to avoid false signals. So you have to look for those converging moving averages when they're getting tighter like this. Right? And it typically looks like this. Okay? It looks like that type of situation. So when signals appear in that type of situation, you want to leave them alone. Now, another thing when it comes to false signals, especially when you get 2 or 3 in a row, time of day plays a very important role in that. Very important. So Bitcoin and you know the major coins, Ethereum, blah, 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 they follow the stock market. There's no question. They follow the stock market. So stock market hours are going to be higher volume hours and appropriate times to day trade. So you're more likely to get momentum at 8 a.m. Eastern time to 12 p.m. Eastern time. But 5 p.m. Eastern time, like what we're getting into now, we're less likely to have momentum. So more false signals are likely now. So something to keep in mind. Also, the London Open, there can be action, right? The London Open, because that's a pretty major market and volume comes in. Asian session is mixed. I don't know. Like sometimes you get action, but you really have to use your judgment on that one. Whereas compared to the New York Open, there's no question there's always volume, or there's usually a lot of volume at the New York Open or just before the New York Open. So time of day. So those are the factors that should help you, right? Using these moving averages. So the moving averages, again, just to recap, serve 2 purposes only. One, to help you pick a side, right? So like, for example, right now, if you notice, the moving averages are converging, right? So I should avoid signals right now. I should avoid signals until this thing gets clear, until the moving averages either cross over and begin to expand the other way. So it helps me pick a side. And number two, it helps me to avoid false signals. So when I see them converging, I should stay away. Okay. I mean, look at this situation right here. Calling for a short, calling for a short. Let me show you this. If you take a rectangle tool, right, and you just highlight the little area of those moving averages at the time, that's the space. That's the amount of space that the moving averages consume in that area, right? Compared to something like this, right, where they're pretty much wide. Look how wide they are in this area right here, right? They're wide and they're not converging yet in this area. Just look at the width of those two rectangles. So when you see it tight like this, you don't want to get involved. It's usually not a good idea. Although it doesn't always fail. Like I said, this was a beautiful trade right here. It doesn't always fail, but it's more likely to fail. And that's what you have to go on. Does that make sense? Hey, Hussein. So again, I'm using the 50 period and the 100 period moving averages. That the green is the 50 and the red is the 100. They're especially important for small time frames because you don't want to use fast moving averages, especially on small time frames, because they're going to cross over a lot and they're going to cause a lot of confusion. You want something that sort of tracks the bigger picture, and that's what the larger moving averages are doing. The slower moving averages are basically tracking the larger time frames on your smaller time frame chart. Does that make sense? So, like, one thing you can do, if you want to align with your bigger picture, for example, you can look at the crossover situation on your hourly, which we know is bearish. And then before you take any trades, you wait for your smaller time frame to align with that. Like, so here you have a bearish crossover. So again, we're not looking at the crossovers for trades. We're looking for the crossover to give us a sense of where we should be confirming or using the Trade Scanner Pro. We should be looking for shorts. The bigger picture says short, and when our smaller picture aligns with that, that's when we should be active. Like, for example, we have a bullish crossover here, while our bigger picture is clearly going to be bearish. I know, I don't even have to look at it. It's bearish, but there's a bullish crossover here. I should, if I'm trying to align with the bigger picture and I'm trying to capture larger potential trades, I should not trade during this because it's not in line with the bigger picture, okay? And then it eventually crosses over, and then I start getting short signals, okay, which would have delivered some kind of profit situation here. Now, again, we're going against the bigger picture. See that? Because we're crossing over the wrong way. I mean, if I switch to the hourly is not going to switch for a long time. Look at this. I mean, I could. That's why I could tell you. I don't have to look at the chart. It's going to take forever before this switches. So that can, if I want to try to align that way, I could say, okay, this is bearish. So my 1 minute, I wait until my 1 minute crosses over bearish again before I even think about taking signals on the Trade Scanner Pro. The signals are not coming from the moving averages. They're coming from the Trade Scanner Pro. I'm just introducing a visual system here, a simple system, because like I always say, the Trade Scanner Pro can be used in conjunction with other systems. The moving average crossover system is your most basic, simple system ever, right? And by itself, it produces no profit. It's not a profitable system because of, there's no advantage to using it and the cost and all that other stuff. It works when there's a trend, but when there's a range, you give all that money back plus more. That's all well-known and factual information. So my purpose here of showing you this is to give you a visual example to help you pick a side easier without going through all the steps that I show you on my previous examples, and to help you filter out these false signals that occur often when the moving averages converge. So like I said, I talked to Steen about this. He knows about this, and he's going to incorporate what I'm showing you here into the script so that you don't have to do what I just showed you. It will just do it for you, but we're not there yet. He's been very busy with his job, so he hasn't had time to do these updates. But I figured, okay, you know what? I'll show you the filter. I'll show you so that you can filter it out yourself. And if you find it confusing, hey, at least you learned something about moving averages. Like I always say, they have their place, but I don't like to put them on my chart. Like, I'm only showing you this time, and I'm going to make a video that basically highlights everything I just said without having to watch a 90-minute stream. But my regular charts, I'm not going to put these on my regular charts because I don't need them. And they confuse me at times. But I think for a beginner, they can be a helpful visual cue. Now, do you guys agree, or what do you guys think? Do you guys find this useful? That's why I figured I'd show this to you. So for our example here, we're getting this bullish crossover. I should be doing nothing, right? Now, let's go to a smaller time frame because I want to show examples. I want to see if we can find some real trades here. Look at this. So this is pretty clear-cut bullish on the 15-second chart. I'm getting a heads up to go long. So you want to play that game. Yes, it's against the bigger picture, but if the 15-second momentum is bullish, right, and that's what this is telling me, then maybe I'll give it a try. Now, how long has it been since I've gotten a signal? I mean, since over here. Notice, there's a signal. I'm gonna go for that. Let's see. Let's put this on. Let's put on 2 contracts, and I'll take it. All right, now I want to go over something here real quick too, because I forgot to mention it. I wanted to talk about the real money exchange situation. Let's see how this goes. Ooh, that's not looking good. But sometimes, again, you get like 1 or 2 false signals before this thing goes before it goes the right way. So let's just test this out and see how it works. It's on paper. Yeah, I knew you would come over to the long side. No, I'm not. And again, I'm just showing you this. That was bad. Let me get out of this. I'm just showing you the example to offer some sort of visual tool to help you filter. Now, notice this was This was a false signal, and my moving averages are not converging. So, like I said, that's still going to happen. And like I also said, I'm not going to put these on my charts permanently. This is just for this example today to give you some sort of way to kind of, simplify your decision-making process further. So you could say, okay, moving averages are this way, then I can trade on this side. But if they're converging, I do nothing, right? To kind of just give you that visual reference. This would be very helpful, being that I have the free version and can only use 2. Okay. Okay. Well, I think on TradingView, there are tools that you could put on where they give you like 2 moving averages within one script or whatever, or multiple moving averages. So you could probably use something like that. But again, like I said, we're going to incorporate everything I'm showing you here. We're planning to incorporate this into the script so that you don't have to have all this, because I am not a proponent of having moving averages on the chart. Okay. Now, here's the thing. We have this, they're converging. So let's give that idea a try. They're converging. I'm not going to take the trade. Okay. To take the trade, I really want to see something more like this. Now, keep in mind, this is a 15-second chart. So it's not going to be the best, most reliable chart to play this game with. But let's see how it goes, right? I want to show examples. So I'm going to ignore this signal. That's the whole idea. So the moving averages are supposed to help me pick a side and also to help filter false signals. So since there's some convergence here, I'm going to go with ignoring it, right? Now, it doesn't mean it's not going to work. It just means that it's more likely to help me avoid false signals. Like for example, this situation, you see the converging back here. Okay, there's no signal there, but if there was, I would ignore signals in this area, right? So same thing here. Now, one thing is it's slightly converging. This can be subjective at times. So, but they are getting closer. So I have to follow the rule, avoid. All right, no problem. There'll be more signals. It's not like, it's a 15-second chart. There are tons of signals on a 15-second chart. So I don't mind filtering out, even if it's a good signal. All right, this one's going to the profit objective. All right, whatever. But you see the idea. Okay, let's check the 30-second chart. Anything there? Let's see. See, this is more what I would have liked to have seen, but there's no signal here. There's no signal. The signal appeared on the 15-second chart, which I stayed out of because of the moving averages getting closer. So we'll wait for the next one, because I prefer, if I'm going to take a signal, I prefer at least the moving averages opening up. All right, now after this move, they're going to open up. So the next signal then is what I'm going to have to do. So we'll just wait. We'll wait it out. We'll watch this one, see how far it goes. Would have been nice. My trailing stop is now at break even pretty much. So this would be if I took the trade, it would have been a break even trade basically. So let's see how this thing goes. Now, at least this thing is telling me I should be working on the long side. At minimum, I know not to short this. Now with the bigger picture, remember the bigger picture? The bigger picture says short, remember that? But I said that this system is relative to your time frame. So if, for example, I was trying to align with that bigger picture, I would have to wait until this crosses over bearish. It's been a while since this thing has been bearish on this time frame. Look, it's going all the way back to here, right? It's been bullish ever since. See that? So that would help me avoid shorts. You know, even if I was trying to get aggressive with these counter trends, right? These counter trend movements, I want to wait for a resistance in those situations. All right. So again, I hope this doesn't confuse you. The idea was to help bring more clarity. Because like I said, you're not going to see moving averages on my charts after this. I would prefer to incorporate this filter into the script so that we don't have all this clutter on the charts, because I don't like lots of stuff on the charts. The Trade Scanner Pro paints enough information on the charts. We don't need more. Okay. So, all right, no problem. Look, this is probably going to touch the trailing stop. We'll wait now. The next signal, I'll be very interested in taking. So let's see how that goes. So, guys, do you see like the value of this? Yes or no? Okay. I just thought, hey, you know, let me show how you can use a system, because I tell people the Trade Scanner Pro works with other systems. So how you know, the moving average crossover system is the most basic, simple system that you could put on your chart. All right, so we're just going to wait. Let this thing touch the trailing stop, and we'll wait for our next trade. So this is 15 seconds. I usually don't like to go lower than this. Let's take a look at the 5 second. Let's just take a look. Let's just see, is there anything on here? What does it look like? Here's a nice example of a false signal. And this one too. Notice, right? This is 5 seconds. This is a ridiculous chart. I would not recommend this chart, but it's a nice visual example. Moving averages converging, right? Look over here. Moving averages converging. Both were losing trades. Right? So that's the whole purpose behind it. But it doesn't always work that way. Clearly, this signal would have been nice. I would have been up nice on this one. But all right, no problem. Also, to make that judgment, if you want to be more, I'm being very conservative here. If you want to be more aggressive, right, to make that judgment, again, I mean, we can make an argument. Yeah, there's converging, but the lines aren't very close to each other compared to a situation like this. The lines are pretty close, right? So when the lines are close like that, that's a really, really good justification to just stay out. When the lines are not so close, but there may be slight convergence, you know, you may still want to argue that one. All right, look, so this trade just got tapped out, right? The trailing stop. Okay, no problem. That was a profitable trade. 72 points on a 15-second chart based on the profit objective. Now, we're going to wait for the next signal. Keep in mind, this thing may completely turn around, right? And we may get the crossover the other way. I'm trying to play on the side of the trend. I'm not using counter trend in this situation. One of the reasons, too, is we're not at a support or resistance level, right? That's why we looked at that hourly, because either way, you still want to be aware of your levels. Whether you use the moving averages or not, that's still an important part of this. You have to be aware of your levels. We're not at a support, as we determined, and we're not at a resistance. We're sort of in the middle. So when we're in the middle like that, we want to resort to the what do you call it? The momentum on our time frame. This momentum says bullish. Okay, a trade is coming up here soon. I'm going to try to buy it when we get the signal. How do I know? We have a heads up. So in the next few candles, we may get a signal. I'm going to give it a try. Let the signal appear. Those moving averages aren't tight, right? They're not super close. If they get close in the next few candles, then maybe I will avoid the signal. But they're not close. So I'm going to take the signal if I get it. Anything? Let's see. We may not get anything here. The price may be moving too fast. That's what happens on a 15-second chart. Like I said, it's not the best example. So what you want to do is you want to imagine this happening, though, on a 5-minute chart or a 15-minute chart, where the candles are that long. You have a lot of time to make decisions. You have a lot of time to think things out. On a 15-second chart, you don't. See, no signal. Okay, no problem. Now, with this type of move, we have a lower high. With this type of movement, if this thing pushes the low, if it pushes the low, then we're gonna get a tighter moving average situation. If we don't push the low, right, we may get a signal here somewhere, which I'm still open to. There it is. Now, can we get a green? Can we get like a green push here? I want to see some green. Oh, look, the candle needs to close for that signal to stick. So look, it's red. See that? It goes right to red. No problem. I'll stay away. I'll stay away. No trade. And look, now we're getting a tighter convergence. See that? It's going to get tighter. See where the moving averages are? They're getting tighter. By the time this closes, they're probably going to be tighter. Look, that stopped out. Now, what kept me out of that trade was not the moving averages per se. It was the fact that we started out with the signal, and then the next candle, because I only had to wait 15 seconds, the next candle was just rejection, red. Why am I going to buy that? I wanted to see green. Like we got green. I wanted to see like another push. Okay, no problem. So I'm not in this. Now, any long signal here, forget it. Done. So I missed this one because, I was being too conservative, but I also missed this one, which would have stopped me out for sure. Right? And that, again, had to do with just waiting for the candle to give me a better look. And now at this point, the crossover is coming. So no more longs. That's crystal clear. No more longs. Also, notice my trend changed up here. Remember, the Trade Scanner Pro is in trend following mode. So when it says trend is bearish, now it's going to be looking for shorts. Great. Now I just need this thing to cross over and begin to expand. I'll be very happy to go short because that's the momentum change. Okay, it changes. So that's my visual guide. Now, if I lacked that visual guide, or as a beginner, I may think, whoa, this is still a long, and I may be still caught up in this. I may draw some other lines or something, and I may still be looking for longs here. But the momentum has clearly shifted. So I should, if anything, I should not go long, if anything. Does that make sense? Now let me know if you guys have questions. Okay. Now we're getting the crossover. Like I said, we're not using crossovers as a system. We're just using it to give us a guide. So we're getting the bearish crossovers just beginning now. Okay. It's starting to expand. I'm open to short signals. Now you say, oh, but the moving averages are close. Yes, but now they're not converging anymore. They're moving apart. They're coming apart. When they're converging, that's when I'm not interested. When they're moving apart, I'm interested. That's also another detail. These things are very detailed. So that's why you do have to pay close attention to these details. I'd rather just program this into the script so that you don't have to worry about it. Right? And that's eventually coming. But, like I said, Steen has been very busy and he hasn't had time to work on this. So, hey, Alex, how are you? From Romania. I love Romania. I haven't been there, but it looks nice. All right. I've seen plenty of videos of Romania. So I'm waiting for a short signal now. Look, my moving average crossover says, look for shorts on this time frame. All right. And we know the bigger picture. We know that hourly crossover is still bearish. I don't even have to check it. We know it's bearish because there's no way it's going to switch in just a few minutes. Right. So now I'm aligned with the bigger picture. Okay, cool. Now I need my confirmation. So now I need my Trade Scanner Pro to give me a short signal. No need to be in counter trend mode here. I'm aligned, right? I'm aligned. Got my trend on. I'm on the right side of that. I'm on the side of the bigger picture. I just need, what I need is a small bounce. That's what I need now. I need a bounce. And then if I get that retracement or that bounce, the Trade Scanner Pro, that's what it's looking for. And then it'll give me the signal, okay? I don't even have a heads up, right? I should be getting a red column, like a red line. I don't even have that. So nothing to do here. The market's moving. It's a good thing. I'm not still looking for longs. If for some reason a long would pop up here, which it wouldn't because the momentum is bearish, trend is bearish, I would not take longs. There's no reason to go into counter trend mode here and look for longs. There's just no reason. So you stay out of trouble. Now, if you'd like to try out the Trade Scanner Pro, there's a 14-day free trial. There's a link in the description. Real quick while we're waiting, I might as well show this while we're waiting. This is the website. If you click on the link, it takes you here and it tells you about how it works and all that stuff. And then you can sign up for your 14-day free trial here. You simply click this, you pick monthly or yearly, right? You save 25% if you're on the yearly. And you have to make sure when you get to this page over here, which is the sign up page, you have to make sure that you put your correct TradingView username in the field right there, because if you don't, you're not going to get the invite, okay? And that's what you want. You want the invite. So the invite typically takes 30 minutes to 1 hour to receive. And once you have that, you can put it on your chart, okay? You have 14 days to play with the Trade Scanner Pro, and you have 14 days to cancel it. It's very easy to cancel. You just go into your user profile, or you can go into your PayPal profile if you use PayPal, and you can cancel it very easily. Don't wait until day 15 and then send me an email saying, hey, I forgot to cancel it. No refunds, all right? Because people try to take advantage of me like that. I'm not going to give you a refund if you do that. You have 14 days. You have plenty of time to cancel it. And don't ask me to cancel it for you. It's very easy to cancel yourself. We automated all that stuff so that you can do that. All right. So I'd love if there was a signal here, but there's nothing. All I know is, based on this, I should not go long. So people that may see a blip like this and be like, ooh, it's a long, no long. What I want to see is a little bit of a move up. Like, so I need something like this move. See this little move over here? This green candle situation right here? I need something like that to appear. That will lead to a short signal if I get that. Because this is exactly what the Trade Scanner Pro is looking for. This in the right situation, right? It's looking for this in the right context. It looks for the initial move and then the retrace. I need a retrace here. No retrace. This little blip doesn't count. That's nothing. This is a 15-second chart. That's really nothing. All right, so you guys following me so far? So let's see. I'm being conservative. Also, I mean, it's a good thing even if I had taken this trade, this long trade that worked, even if I had taken that, the trailing stop would have gotten me out and I would not be in this. So another important point, always respect those stops, whether it's a trailing stop or the stop loss. Always respect those. Whether you program the stop into your platform or you manually get out, because otherwise you get caught. You get caught in these situations. You cannot get caught. It can be very expensive. I'm using a practice account here, so it doesn't matter. But with real money, you don't want to get caught. Now, on that note, while we're waiting for something, maybe something will develop here while I'm talking. We'll watch this here. We're getting this little bit of a retrace, so that may turn into a signal. The real money account situation. So the week before, I went into, I looked into some of these exchanges that people suggested, like WeX and whatever, Femex. And WeX was promising, except Steve gave me a red flag. He said he saw some reviews that people were getting locked out of their accounts for some reason. There was something like that. He said he said that was a red flag. I said, okay, no problem. I'm not going to go with that then. And then Blowfin was the other recommendation to check into. I looked into it, and I always read the TOS, and it specifically says US residents are not allowed to use their platform. So maybe, and this was suggested by a guy in the US, so maybe they're not enforcing that. But what that tells me is at some point they may get around to enforcing it. And they'd be like, oh, by the way, you're in the US, we're locking you out of your account, and now it's a big inconvenience. And now you got to get your money out of there, blah, 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 blah. I'm not going to go through all that. So although Blowfin never blocked me from their website from being from the US, I'm not going to do an account with them. So here's what I'm thinking, because I've looked through a lot of exchanges, centralized and decentralized, right? The decentralized have their own set of problems that I do not like. So to do this real money example, I'm seriously considering WeX. Although Steen pointed out that red flag, they're the only ones with a money transmitting license that can legally do business with people in the US. They're the only ones of all the 12 or 15 exchanges that I looked at. They're the only ones that have like a decent platform, that the costs seem to be within reason, and I can actually open an account without a VPN, and KYC is not mandatory. So I'm going to have to do some more experimenting. But now the thing is, because of that red flag that Steen pointed out, I'm probably not going to do $1,000 account, because if I get locked out, I don't want to have that situation. So I'll probably do a smaller account. Okay, maybe like I'm going to experiment with a smaller amount of money just to see what the fills are like, just to see what the slippage is like, just to see what the actual costs are like. And then if I like it, maybe I'll do like $500 or something like that. But not going to put 1,000 in there just to watch it get locked up or get locked out of my account. If that's the case, I'm also going to put a lot of warnings. I'm going to let people know that this exchange does not have the greatest reviews. The only reason why I have to use them is because I can't open an account anywhere else where I can show reasonable examples with real money. So that's my conclusion so far. If you guys have any suggestions for a US, because Coinbase sucks. Forget Coinbase. They're the worst. All right. If anyone else has any suggestions for me to look into, I'll look into them. But so far right now, it looks like WeX, and I'm not an affiliate. I don't plan to be an affiliate, right? So I don't recommend them or anything like that. But if I'm going to use real money examples, most likely that's what I'm going to use. Okay, but I haven't made the full decision yet, but that's what I'm leaning toward, simply because I can open an account there as a US resident. It's ridiculous, right? Anyway, I was thinking about them, Nugs, but I don't know, I'll have to look into them more. Do you use them? I mean, I know that I believe that they open up US accounts, but I'll have to look into that a little bit more. Because I mean, of all the centralized exchanges that I look through, I'd say like 98% of them do not open US accounts. Man, this thing is just not giving me a break here. Like, this thing will not bounce. Look at this. Man, good thing I'm not long. Wow. All right. So, I mean, I don't want to have to do a 5-second chart, but watch. There's going to be signals on it. Look at that. Look at that. Signal. On a 5-second chart. When the market's moving very fast like this, and it doesn't, like when it's like really moving and it doesn't want to pull back, this is what you have to do. You have to go to a smaller time frame. It sucks. I don't like it. And now we're pulling into the support area. This is the support. This blue line is the support that I drew on my chart earlier. Now I have to be careful with shorts. I mean, the moving average is telling me short. Man, look at this example right here. That would have been nice. All right, but now I have to be very careful. If we get a signal right here, right in front of the support, like this is where, like I said, This can reverse hard in my face. I'll give it a try if I get the signal on a 5-second, if it's the only way I could demonstrate an example. But I would not recommend this. I'm sorry it has to be this way, but I'm trying to do this within the streaming time that I have. Otherwise, I'm not going to sit here for 3 hours waiting for a signal. That's what you have notifications for. You can use your TradingView notifications, and you let TradingView tell you when a signal appears. It's very easy to do, right? You just go to your notifications things right here. You just do this, right? You pick the Trade Scanner Pro over here from this list. Okay, very simple. And that's it. On the free version of TradingView, you can only set one. But if you have a paid version, you can set more than one. And it'll tell you when a new signal appears, when a stop is reached, and even when a heads up appears. Okay, this should produce a signal. Notice, we're getting this more dramatic move off of the support. What a surprise. Okay, so I'm going to try the short, but this is going to be very risky. I'm going to try it once I get the signal, because I missed all the good ones because I was watching a 15-second chart. In fact, wait, let's check the 15-second real quick, because this may produce a signal on the 15-second, that kind of move. Let's see. Well, I'm not even getting the heads up. All right. So back to the 5-second. There's going to be a signal here very soon, most likely. Now, I'm going to short this thing right into the support, which I am not exactly thrilled to do. But let's see. All right, no signal yet. No problem. But it's likely to pop up. That's the whole point of the heads up. And if I get it, I'm going to short it. But what I'm going to do is, if I get the signal, right, there's no convergence of the moving averages are not moving closer together. So I'll still give it a try if I can get a signal. No signal. I'm willing to give it a try, but I'm aware of my location. Okay, this blue line. That's why I draw those support and resistance levels on the chart. I'm shorting into a support. I need to be aware of that. This momentum may change here, and this short may be a tough short to take, but let's see. It's also possible that the support breaks. Remember, our broader trend is bearish. So, like I said before, lower high leads to lower low. That hourly chart is most likely showing a lower high, and this is where our lower low would happen. Right? We'd break the support. Okay, nothing so far. All right, no problem. Are you guys learning? What do you guys think? Or am I confusing you guys even more? You could tell me either one, because I'm here to use your feedback so that I can help you have a better experience, right? That's the whole idea. Okay, here's another heads up. It's a higher high, but on 5-second, it doesn't matter. Let's see if we get the signal here. The moving averages aren't converging enough yet. Now, if we get like a big vertical candle, like a really big vertical candle here, then that's really going to start moving those moving averages much closer. And that's when I'll start to go into avoid mode. But we're not there yet. We got that heads up, so I'm open to the short. I'm still open to it. Let's see. But interesting how the price action changes near that blue line. Man, no signal here either. That would have been nice right there. But you have to be patient with it. Can't force it. But this is why, exactly this, why it's so important to have to know your location. Oh man. All right, let's go to the 15-second. There's just nothing to do. Not going to force it. It's all clearly bearish. Now, the other question, should I be buying here? Should I be doing the counter trend? Well, here's the thing with that. I'm fighting the bigger picture. If I do counter trend and I start looking for longs here, it might be a quick long, but I'm fighting the bigger picture. If I'm going to do that counter trend, it's better if I'm not fighting the bigger picture, meaning the bigger picture is bullish and we're just getting a pullback on the smaller time frame, right? That's really ideal for counter trend. I don't have that situation right now. We're likely to make the lower low. So I'm going to buy into that. It's riskier. You understand? So this is a probability game. I can do it. It's just the chances of it working out are going to be lower. So if I go for that long, I'm going to have to be quicker to get out if I'm wrong, or just, as soon as it goes the wrong way, bang it out. and not expect much on the long side. That's how I have to play that, right? So it's sort of like an expectation game. If this was now, if our bigger picture was bullish and this was a broader higher low, and I'm just buying into, the bottom of a higher low on the bigger picture, then that makes sense. Can you guys picture that? So far, no signals here. I'm still open to the short side if it'll give me a short signal. I'm aware that I'm sitting on the support and that this thing may reverse. But I'm not going to take the long because this is not an ideal long scenario. We're sitting on something that's generally weak and support is likely to break. So that's an expectation thing. That comes from, how do I know that? It just comes from experience. But you don't have to have a lot of experience to utilize something like that. It's just having a good grasp of trend behavior, right? A bearish trend, resistance is likely to hold, support is likely to break. And in a bullish trend, it's the opposite. It's that simple. So you're just basically assigning a probability to the scenario. All right, I'm getting heads up here. We're starting to converge. I may have to avoid this, especially since we're coming off this support. I may have to avoid this. That's the whole point of these moving averages. There's the signal. All right. I'll give it a try this one time. I don't like the moving averages. The thing is, this is a 5-second chart, though. Is it right? It looks like it's right. It's a 5-second chart. I can't give it a lot of weight. All right, stopped out. View. And that if you want to try the Trade Scanner Pro out for 14 days, there's a link in the description. And you have 14 days. You can cancel it at any time. All right, guys. Also, if you ever get any kind of unsolicited messages from me or Steen or Alex asking you for money, it's a scam. There's a lot of that going on. That scamming is a very common thing these days. Please don't be fooled. So if you see something like that, block the person. Please let other people know, and you won't get scammed. All right, everyone. So thank you for watching. I hope you got something out of this. Enjoy the rest of your day, the rest of your evening, wherever you're in the world. And thanks again for watching. Look at this thing I just have to say this. Look at this profit objective. Come on, man. All right, that's it. Have a good one, everyone. I'll see you next time. Thanks for watching.